AMC. Its stock has had a wild run lately, up to $72 per share on a given day. Then it dropped all the way down, and we've been seeing it consolidate. No fun over the last couple days, but that doesn't mean it's over yet. Today's video, we're gonna go over everything going on with AMC. We're gonna put timestamps down below, but we're gonna start off by going over insiders selling more shares in the last 48 hours. After that, we're gonna go over great news with the credit rating upgrade for AMC. Moving on, we're gonna talk about Jim Cramer, how he actually changed his mind on AMC and GameStop and on many meme stocks, and he actually said, you know what? Maybe it's time to buy them. After that, we're gonna talk about proof that suits are lying to us. It's written down in the numbers. We're gonna look at the data. Very exciting stuff. And at the end of the video, we're gonna talk about the short interest of AMC, the price, and our game plan moving forward, because it definitely is not too late. So if you enjoy this sort of content on AMC, well then please be sure to like the video, get this out to the ape community, and also subscribe to my channel, turn on the bell notifications, and don't forget to follow me on public.com investing app to see all my updates on AMC, the stock market, and what is in my portfolio. But anyways, right now, AMC board members came out within the last 48 hours, according to SEC filings, and have been selling more stock. $4.8 million worth of shares were sold over the last 48 hours by insiders. According to AMC in this SEC filing, it says that $4.8 million profit were sold this week, and that adds to the insiders who sold last week. Last week, we saw about $8 million sold from insiders, from the CFO to board members to directors, and this week we saw an additional $4.8 million already, bringing the total to right around $13 million in the last 2 weeks. A lot of people are saying, Michael, this is not a good sign. This isn't bad. Insiders sell stocks all the time, and you gotta remember, $13 million for a group of about 10 insiders, 10 board members, directors, that's barely anything. These people get paid in a lot of the, if they work for the company, they get paid in stock compensation packages. A lot of their bonuses are paid with stock compensation. So these people are selling off very small positions of what they actually own. So even though $13 million seems like a lot, when you divide that by 10 people, and when you're talking about people who get paid in stock compensation, this is really nothing. Not to worry about this at all. Something that is interesting to know, we're seeing insiders sell AMC when previously, over the last couple of years, we had not seen them sell as much of AMC. But other than that, nothing to worry about at all. Shouldn't have any bad impact, any negative impact on the stock. They're simply taking profits, taking some money off the table, but it's not like they don't own any. And still, the most important person, the CEO, Adam Aaron, he still has not sold anything since he first became CEO. So that is something we like to see, a true ape. Next up, let's talk about the S&P credit ratings. So the S&P just boosted AMC's rating to CCC plus from CCCI, so triple C plus to triple CI. This is a 2-notch upgrade, which is pretty exciting. You know, we like to see this. This essentially means that there's a little less risk associated with investing in AMC. Either way, we know there's a lot of risk with investing in AMC for AMC getting credit, but what this rating shows is that, look, AMC is in a little bit better of a position financially. They've been able to raise about $1.25 billion through equity offerings over the last couple weeks, and how this affects us is it just means, look, AMC is in a better position than they were a month ago, 2 months ago, because they've raised more money because of us, the investors, the retail investors who have been behind it, who have pushed the stock price up. They've been able to pay down debt, refinance expensive debt that was incurred during the pandemic, improve theater attendance, and they're also even looking at expanding, growing, and innovating their business moving forward. So really what this means is that credit rating has been upgraded, still considered a junk rating, but good sign, because we are seeing that the risk isn't there as much. They do have more cash on their balance sheet, more money to pay down debt, more money to make some changes, make some things moving forward. That is a good sign. Next up, let's talk about Jim Cramer, because he came out and changed his mind a little bit on AMC, and he said that he's not against GameStop and AMC at the current trading levels. He's like, you know what? Where they're positioned now, even though the prices are high, even though they could drop, he's not against them. He's not against people investing them anymore. He's like, yeah, you could take some profits off the table. But he said, look, not against them, because these companies right now have the ability to reinvent themselves because the high stock prices and the strong communities have allowed them to raise additional capital. This is exactly why their credit rating has been increased. This is exactly why AMC and GameStop could actually be much bigger than they are right now if we're even looking at it long term. Yes, of course, we still have the short squeeze, but if we're talking about long term, all the money they've raised recently, all the new shares they've issued is only gonna help them be a bigger, better, stronger business down the road. And for that reason, Jim Cramer's like, you know what? They are in a much better position. They have a lot more money to reinvent themselves, and even if they issue more shares, stock prices aren't gonna go down because of that. We have seen time and time again with AMC and GameStop that even when they issue new shares, it's not gonna affect the price. Yes, we might see a dip in pre-market or during the day, but for the most part, whenever we see them issue new shares, nothing happens to the stock price, which is exact opposite of what typically would happen. Typically, when a company issues new shares, you see the stock price drop because your position is getting diluted. Not gonna happen with AMC, not gonna happen with GameStop, and that is good news moving forward if we're looking at this long term. Now let's get into exactly why the suits and Wall Street are lying to us, completely just flat out not telling us the truth about AMC and the short position and what is going on behind the scenes. So right now, according to a new report that came out on June 9th, 2021, late in the evening, from AMC, they said that there were about 501.7 million shares as of June 2nd, 2021. Shares outstanding. That means how many shares were available to be bought and sold, and traded. And they said that if you owned it on June 2nd, well, then you'd be able to attend and vote this shareholder meeting scheduled for July 29th, 2021. In addition to this, they said as of June 2nd, out of those 501 million shares outstanding, there were 4.1 million shareholders, individual shareholders, and each shareholder owned on average 120 shares. They said that right now, retail investors make up approximately 80% of all shares available. They said more than 80% of AMC shares are held by a broad base of retail investors. More than 80%, let's keep that in mind. Looking over at the data, because this seemed a little bit unusual. Looking at the data, which we did talk about a bit earlier, AMC, like they said, total shares outstanding, 501 million shares. We know that. They also said they got the 492 million shares owned by retail investors. How'd they get this? Right here on the bottom, the math is done right here. 4.1 million shares multiplied by an average of 120 shares. That brings us to 492 million. 492 million is way more than 80%. Yes, in the letter to shareholders, they said that it is more than 80%, but right now, if we're talking about retail investors, that's like 98%. If that is how much is owned by retail investors based on the data they're giving us, that should be about like 98%, which is completely, it doesn't make any sense. In addition to this, when we're looking at major holders and short interest and everything else, it brings us to a total of 872 million shares, which means that we're at 174%, extremely shorted. There are way more shares being shorted right now than people are actually telling us. And these numbers simply don't add up. The main number that is not making any sense is really this owned by retail investors. First of all, they're saying it makes up 80% of total shares outstanding when it makes up 98%. And for that reason, we're seeing all these numbers make really no sense based on the data that they're giving us in the shareholders report. Yes, we know how many shares are outstanding. That number we know for sure. But all the other numbers, there is definitely something fishy going on. They are definitely lying about some of these numbers because either exchanges are lying about the short interest and telling us that it's 20% when it's really closer to 80% or 70%. That's one of the cases. Or another case is that some of these other companies that are reporting this data, whether they're exchanges, whatever's going on, is just completely 100% inaccurate, because there's no way that we could have a 20% short interest if 492 million shares are owned by retail investors right now. There is simply no way. And we know that's the case because that is what the report said on the AMC Investors website. So obviously right now we have a much higher short interest than what's being reported, and something fishy is going on. Something not right is going on with AMC. And are they trying to manipulate it? Are they trying to spread fear? What is going on with institutions? Are they just trying to hold us down? Possibly. That is definitely a possible scenario, and we'll have to wait and see. But all we do know is that if the numbers are accurate, which I would assume they are from AMC, I would assume the reports they're giving out, because they are all for retail investors, I would assume those reports are accurate. And based on that, that means that something is completely off with the short interest that is being reported. So something to keep an eye on. And finally, let's talk about AMC's short interest right now, according to what the data says. So right now, according to data, it says that AMC short interest is 22%. Short volume is right around 50.2 million, and the market volume for today was 224 million shares. That is a bit better than what we saw the last couple of days. The last couple of days, we had seen the short volume ratio drop below 20% for a day or two. It was at 18, 19%. We're seeing it back up. That means that institutions, short sellers are holding strong, and they are continuing to bet against us, continuing to bet against AMC, and they are trying to hold the price down. They're betting it's gonna drop. That is a good sign, because that shows us that they're not backing down. Last time in the previous short squeeze back in January, institutions backed down. They lost billions of dollars. They covered their positions, but we're seeing the short volume ratio increase, means that we're not seeing them cover their positions, which means we are still set up perfectly for a short squeeze. And like I said, these numbers being reported are most likely inaccurate. They're probably a lot higher than that, than what they're telling us, based on all of the data we went over earlier in the video with what was reported from AMC on their investors relations website, from what exchanges are saying. The number for short volume ratio is probably double what it is right now. It could be even more, but all we know is that something is not right with the short interest, because the numbers, the data just isn't adding up. Right now, AMC stock price is sitting right around $45.80. It's up 6.9% after hours, just about 7% after hours. Great sign. We are seeing a lot of positive news come out from the credit rating increase. We're seeing some positive news come out with what is going on behind the scenes, long-term development plans, and with the short interest. So things are still looking really good. Short sellers are still betting against AMC, which is what we want to see. We don't want to see them, cover their positions. They still have short interest very high, which means we are still set up for a short squeeze. So a lot of exciting things to come with AMC. We have been consolidating over the last couple of days. Ever since we reached the all-time high of $72 per share, we are consolidating, coming back down. We'll probably reach a support level, probably where we are right now, right around that $40 per share range. We've hit that number about 2 or 3 times already, and we seem to be holding strong right around that. That's what's going on with AMC. Still set up for a short squeeze, and let me know what you guys think. I hope you enjoyed today's video, and I'll see you in the next episode.